Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Dan Habib of MBS Highway, brought to you by Paramount Residential Mortgage Group.
Welcome to another edition of Master of the Markets. I'm Dan Habib with MBS Highway. This is provided exclusively for NMP TV and brought to you by our friends at PRMG. They're working for your best interest. Last week was certainly a volatile week, really tight labor market and hot inflation data. First, let's break down the jobs data. We saw the JOLTS, or Job Openings and Labor Turnover Report, come out and show that there was 11 million job openings out there. So one of the biggest things that companies have a problem with is finding and retaining workers. And as a result of this, we've been seeing wages rise significantly. Companies have to pay more to retain their workers and pay more to attract new talent. And because of this, the pace of firings has really been muted. We got initial jobless claims, and this showed only 184,000 initial claims, or people filing for unemployment benefits for the first time. This makes sense, but it's also the lowest number since the summer of '69. So you couple this together, and it causes wage-pressured inflation to rise higher. And sure enough, the big report we got last week was the Consumer Price Index, or CPI. This measures inflation on the wholesale level. And this is important to us because inflation is the enemy of the bond market. It erodes the value of a bond's fixed rate of return, and it causes interest rates to rise. Well, the Consumer Price Index was already hot at 6.2% on a year-over-year basis. Well, guess what? That jumped up to 6.8%. So almost a 7% handle on year-over-year inflation. The core rate, which strips out the volatile food and energy prices, went from 4.6% to 4.9%. So this is red hot inflation. Also within this report, we did see rents went up instead of 2.7% year over year, 3% year over year. And then owner's equivalent rent, which tries to capture the rise we've seen in home prices, increased from 3.1% to 3.5%. So these numbers clearly out of whack with some of the other rental increases that we're seeing out there, because most other rent reports have rents in the double digits. So what's interesting is that, hey, if these numbers are really more in line with other reports that have their finger on the pulse of the market, we'd likely see year-over-year inflation much higher by a couple of percentage points. But the big thing of this week is going to be the Fed's two-day meeting. It starts on Tuesday. On Wednesday, they're going to have their Fed statement. You're going to have a Jerome Powell, the Fed chair, his press conference. And in this meeting, the Fed is going to lay out their projections for, number one, where the Fed funds rate is going to be. So we can see the consensus from the Fed on how many rate hikes they think there's going to be in 2022 and the years going forward. But I'm also interested to see what their thoughts are on inflation, because if you remember, the Fed for the longest time has been saying that inflation is transitory. Well, they pretty much deleted that word from their vocabulary just over the last few weeks. Jerome Powell finally saying that, hey, inflation is going to be more persistent. And after this inflation report, boy, they must be a little bit worried. So the expectation is that the Fed is going to increase the pace of their tapering. So just to break this down real quick, the Fed has been buying $120 billion a month in mortgage bonds and treasuries. The reason why they did this, stimulate the economy, inject liquidity, and also to keep long-term rates low, because when you do that, it promotes expansion and it helps the economy to grow. Well, a side effect of this is it causes a lot of inflation, which is what we've been seeing. So the Fed then came out in November and they said, we're going to reduce the pace of this buying of $120 billion a month by $15 billion a month. So instead of buying $40 billion a month in mortgage bonds and $80 billion a month in treasuries, they said, we're going to cut that down to $35 billion a month in mortgage bonds and $70 billion a month in treasuries. And if they kept doing that at that pace, they would have been done with their purchases by June of 2022. Well, in the face of this rising and rapid inflation, it's expected the Fed is going to accelerate that pace. So this week on Wednesday, we may see the Fed say, hey, guess what? We're not going to taper by $15 billion a month. We're going to taper by $30 billion a month. And if they kept that up, they would be out of the outright purchasing game by March of 2022. Now, remember, one of the things the Fed doesn't tell you is that they're still going to remain very accommodative because they've been reinvesting all the proceeds that they receive from these mortgage bonds that they're holding on their balance sheet. Remember, when people make principal payments, they sell their home, they refinance, Fed receives that money. It would normally come off their balance sheet. They've been reinvesting that back into mortgage bonds to the tune of about $70 billion. They have not addressed that. But the big news here is the reduction, the faster pace of tapering. Because once the Fed is done tapering, well, then they can set their eyes on when they're eventually going to hike rates. And that is the big tool out there for what they can really do to curb some of this massive inflation that we're seeing. So this week certainly could be volatile, We'll keep you posted. And listen, if you're not on MBS Highway, we break this stuff down for you every day. Make sure to give us a check out. Thank you guys, and have a great one.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.